Hi, this is Mark with Right Line Trading. This is our evening newsletter, starting with this disclaimer that all signals and trading opportunities we provide are for educational demonstration purposes only. Everyone should understand that participating in trading in the markets involves substantial risk, and a person can lose a substantial amount of money. Always carefully consider your financial position prior to trading. Never risk more than you can afford to lose, and you may want to consult a financial advisor. Now, here is a 1 minute, 5 day chart of the Qs. And you can see that they have they've taken a fairly big beating. If I close this up, we can see a little bit better over the course of the last 5 days, pretty much how far down they've come. Now it's really squeezing our signals together. But right from here at 390, we're all the way down to 377. So it's almost a $13 drop in price in the Qs. Now the Qs right now are firmly entrenched, technically, in a bearish scenario. We've got the 50 here sloping down. And this is a 50 exponential with exponential smoothing. Our 15 is heading down. It's a 15 exponential EMA with exponential smoothing. Our C2 is heading down. On all our analyses here are red. Our correlative, our quant line, our correlative market line, our triple screen assessment of Laguerre, our order flow is also heading down. The whole enchilada, everything is pointed to further down, and our order flow tells us that the market is awash in an overabundance of sellers. So we would consider that there would be ongoing movement to the downside. But tomorrow, we're facing a little bit of a different market environment. Firstly, the Supreme Court struck down the workspace mandate or the work mandate for everyone to get vaccinated. Now, I think that's going to be a big positive for business. Instead of having to lay off tens of thousands of workers who for one reason or another, just don't want to get vaccinated, and I'm not going to make any judgment on that. I don't want this to be a political discussion, just simply a discussion about the direction I think the market's going to go. They're no longer going to have to get vaccinated. Employers are not going to have to lay off all these workers. It would have led to a real problem. Now, ultimately, with less workers, our supply chain problems would simply have intensified. And with a scarcity of goods, that's another driver to increase price. So that's an additional incentive or additional push for inflation to really push up the price of goods and services, simply because they have become more scarce. That's one thing that happened towards the end of the day, I believe. Second is tomorrow morning at 8:30 Eastern Time, we're going to get a core retail sales report. And that's going to give us, I think, a little bit of an indication of where the economy is headed. So what I would do is I would stand aside on the Qs tomorrow and determine how they trade tomorrow to take a position at 3:30 in the afternoon tomorrow on an option that expires on the 21st of January. I would take a weekly options position, and I would have the expiration on the 21st. And if tomorrow is a strong up day, based on these two metrics, the CPI and the fact that the vaccine mandate was struck down by the mandate by OSHA, We get nice bullish movement into the market tomorrow. And at 3:30, as we move into the close, we haven't rolled to the downside and that bullish sentiment hasn't weakened, then I would look to see bullish follow through on Monday and potentially throughout the entire week. Now, if we get a huge gap up on Monday in the Qs, really significant bullish movement, I would probably set a sell order at plus 50%, at least for half your positions. Then let the remainder of the positions run. And once you get 50% profit, move your stop to break even on the remaining. You've locked in 50% of profit. Your stop is at break even. You're in no risk on the remainder of the contracts that you hold. And if bullish sentiment continues throughout the week, there's the potential to make a really nice amount of money. Now, many of the tech stocks are oversold, but they're not going to bounce unless they get a reason to do so. On speculative tech, growth tech stocks that have really been soaring, and on many other market sectors that are really responsive to inflation rates, we're not going to get a bounce unless we see the market response to these two metrics. So how have I made it too complicated? Essentially, I would look and see what the CPI is. If it's really favorable, the market responds favorably to it. They like the fact that the Supreme Court has struck down the vaccine mandates. We get bullish tech activity going into the end of the day tomorrow. That's really the key. It's not where the market opens tomorrow. It's where the market is moving to when the market is looking to close tomorrow. Then what we're going to do, if we have ongoing continued bullish sentiment, we would take an options position on Monday. Now, I believe Monday is a market holiday. It's Martin Luther King Day, and as far as I can tell, the market is closed. So what we would have to do is wait till the open on Tuesday morning. We would have, if we see bullish activity, we are going to buy a call, hope for that gap up on Tuesday, and see the kind of follow through that we get. We're going to lock in 50%, bring our stop to break even, and then roll with the remainder of our contracts and hope for bullish sentiment to continue to move throughout the week. Now, if we get bearish sentiment, I would stand aside. I wouldn't trade a further move to the downside. I would look for a bounce here and for a move to the upside. And if we don't get it, I would stand aside on the market. So that's how I would play the Qs tomorrow to set myself up for a bullish trade if we see bullish movement going into the close. Everybody have a really wonderful evening, and I look forward to talking with you tomorrow.